Back on March 14, 2017, the shares of a Quebec-based pharmaceutical company, which was one of the most valuable companies in Canada, went down by 13%. This fall had become the new worst low point for the drug-making giant, which also owned Bausch Lomb. What exactly set the trail to this pharma giant's fall? How did it affect the company's prospects? What were the overall outcomes? We'll answer all these questions and more right away, so let's get into it. It all started back in June 2010 when a Mississauga-based Biovail Corporation merged with the California-based Valeant, which was done through a deal wherein Valeant shareholders were offered $3.2 billion in both cash and stock. This was soon after Biovail emerged in the stock market by almost 15% and decided to widen its prospects. A few years later, in May 2013, Valeant decides to buy eye care company Bausch Lomb for $8.7 billion, which furthered its share growth to an additional 10%, which put it at an all-time high share price of $95 in the afternoon trading on the Toronto Stock Exchange. A couple of years later, billionaire investor William Ackman reveals his perishing Square Capital Management hedge fund purchased a 5% stake in Valeant. In a major setup, Valeant passes RBC to become the most valuable company on the Toronto Stock Exchange in July 2015. Later on, in September of the same year, Valeant Pharmaceuticals buys eye surgery product maker Synergetics USA for $192 million. A month later, in October, Valeant cut its ties with mail-order pharmacy company Philidor, which was after the release of a report on Philidor which accused the company of fraud. The report that followed the split mentioned very little about Valeant's relation with the mail-order company, and the only response from Valeant regarding this situation was the announcement where they stated that they were being subpoenaed by US prosecutors investigating its drug pricing and distribution policies. Despite all the havoc wreaked on the company and its reputation, another billionaire investor, Bill Ackman, pledged his support to the company by buying 2 million shares in Valeant. Later in November, Citron Research released a report calling the company's stock toxic, with the added information regarding the difficulty faced by Valeant to pay back its debts. In March 2016, things took another major turn as CEO Michael Pearson stepped down as an investor right when Bill Ackman joined the board. Pearson broke the news to the investors about not being able to file the quarterly earnings reports, which was due to an accounting error. Even after the statement and the questionable condition of the company's assets, investors did not respond to the organizational wreck as shares continued to rise by 12% on the Toronto Stock Exchange to $40 per share. Just a week later, shares fell by 6.4%, ending in $30 right after Michael was subpoenaed by a congressional committee investigating the soaring prices for prescription medicines. A month later, in April, US lawmakers accused Valeant of gouging patients in a congressional committee wherein the senators mentioned and investigating into a 30-year-old drug, Cyprine, acquired by Valeant in 2010 and had been hiked in prices by a factor of 3,000. Amidst all this, a new CEO, Joseph Papa, was appointed, and he said that he hopes to restore the company's stature, as he said to the media and the shareholders at their annual meeting. To battle this, Valeant offered rebates of up to 40% on NitroPress and Isoprel, which were two of the most popular hard drugs. The price of NitroPress increased by 310% and Isoprel by 720% since Valeant had acquired them from Marathon Pharmaceuticals. By August 2016, shares rise by 20% as the company announces a reorganization, and 2 days later, Wall Street Journal reports that the US prosecutors have opened a criminal investigation into the company to probe whether it hid crucial information from the investors or not. By November 2016, the company shares fell to a 6-year low, losing more than 18% in value on the Toronto Stock Exchange. Former executives were arrested after having confirmations of them conducting fraud with the investors. This was followed by the company selling off a large portion of its previously owned skincare and other sub-brands. Most recently, Valeant shares are for $6.4 per stock point, which is at all-time low since the beginning. It was subsumed under the Bausch Health company later on. So, what conclusion do you make of this in terms of investor-company trust relations? Let us know in the comments below.